Good afternoon and welcome to Mid-Cap Radar. I'm Vivek Iyer and with me today is Hormaz Fatakia. Good afternoon, Hormaz. It's another session where the benchmark indices are in the green. Another session where you saw very weak cues from overnight markets. And another session where there's been a little bit of a bounce as far as an intraday recovery is concerned.
Let's hope it's not another session where the bounce does not sustain as well. But indeed, that's what the story of the market has been, right? Weak cues coming in from Wall Street. Most of the other global markets shut today. And after the gap down that we had, it's been a very substantial recovery that the Nifty has had. But let's take you through the next 30 minutes of the show, starting off with the top headlines this afternoon. The market has come off the morning lows in year-end trade that is thin on volumes. IT and Realty are the weak spots. Metals and healthcare are exhibiting strength.
Reserve Bank of India in its financial stability report has flagged the rise in write-offs, especially by private banks, saying these could be masking worsening asset quality in the retail credit segment.
Ease My Trip co-promoter Nishant Pitti is likely to exit the company via sale of his 14.2% stake. Nishant had earlier divested nearly 14% in September for over 900 crore rupees. The move raises eyebrows with questions around the motive for this move.
EV player Ather Energy's 4,000 crore rupee IPO has got SEBI's green light. The fresh issue of shares to raise 3,000 crore rupees will help it expand its capacity by 3.5 times. Two-wheeler maker Hero MotoCorp will remain its biggest shareholder.
And Brent crude rises above $74 a barrel after US inventories declined and China's manufacturing activity saw positive expansion in December. With that recovery, oil is set to close 2024 with modest losses of nearly 0.5%.
Well, welcome to Mid-Cap Radar. As you can see, most of the indices on the screen are trading in the red. The small cap index is the only one that's managing to see a bit of green. What's doing quite poorly today is the entire IT pack. The IT pack today at one point in the day was down almost 2.5%. And in fact, most of the heavyweights were seen as large drag. Names like TCS, Infosys were some of the large drags. But on the other hand, the other rupee sensitive actually saw divergent trends. You saw names like Cipla, Lupin, Sun Pharma from the pharma pack today that did quite well. But this show is all about mid-caps and names in the broader space. Upasana is standing by the wall. This is our special segment, Mid-Cap Movers. Upasana will take us through the mid-caps that are moving around in the session.
Well, first up, let us look at the top losers in the market today in today's trading session. Persistent System is down about 2%. Phoenix Mills is down nearly about 3%. It continues its 3 days losing streak. AU Small Finance Bank is also down about 3%. It's down most in the last 9 weeks. Indian Hotels is also down and followed by Cochin Shipyard down nearly about 2%. Now let us look at the top gainers on the flip side. Torrent Power is up nearly about 6% and this rise follows the 4 days of decline seen in the last 4 trading session. MRPL is also up about 5%. Hoodco is up nearly about 4.15%. Oil India also gaining into today's trading session and Muthoot Finance is also up nearly its 52-week high. Now let us look at the top volume buzzers in today's trading session. Vodafone Idea was a newsmaker yesterday as well, continues reeling upwards in today's trading session as well on terms of the strong volumes. Yes Bank also in focus, NMDC followed by Suzlon Energy, which was again in focus yesterday as well. Now let's look at the news makers in today's trading session. First up is Lupin. The stock hits 52-week high after the company makes a good addition in its diabetes portfolio. It remains in focus, up nearly about 2%. RVNL also in focus, up nearly about 4.5% as the company bags 137 crore order from the Central Railways. Mazgaon Dock also in focus as company has signed a contract with Ministry of Defence worth 1,990 crores. And Shriram Properties also in focus as the company has announced strategic sale of a land parcel in Chennai, up nearly about 3%. And lastly, the IPO listing, that is Unimech, is up nearly about 73% as the IPO makes a stellar debut with 86% premium.
All right, Upasana, thanks a lot for sharing those movers then within the broader markets. Let's also welcome in Apurva Sheth of Samco for a technical check on the markets. Apurva, good afternoon. Thank you so much for joining in. Firstly, wishing you a very happy 2025 to you and your team as well. You know, we've had this bit of bounce from the lower levels, but the question is, as has been the case over the last 8 to 10 days, will the bounce sustain? And what is your call on the index for the January series as a whole? And couple that up with your stock recommendations as well.
Thanks a lot, Hormuz, and a happy new year to you and all the viewers of CNBC TV18 as well. So, Nifty has been trading in a lackluster fashion, and volumes have also dried up. So, even the cash market volumes have dried up to about 80,000 crores turnover on NSE. So, there's very little action happening in the markets, and this is likely to remain for the remaining part of this week. And volumes should pick up in the next week. So, Nifty for the extreme short term, the major support level is 23,500, and from a slightly medium term perspective, the low which was hit 2 months ago, which is 23,250, is likely to act as a very strong support. So until and unless these two supports are held, bulls have some hopes for a bounce back, and this bounce back could put the markets to 24,100 and 24,500 levels. On the January series, the series is not so. January as a month is not so strong. Seasonally, 3 out of the last 10 years, only the January series has ended on a positive note. So, not very great January for the markets. We'll see there'll be a lot of volatility coming up with Trump coming back in office, and also with budget. So let's wait for that. And on the stocks front, we have Sun Pharma. So the stock has been a relative outperformer, and it's been an uptrend when the market was crashing down. So, and last quarterly numbers were also quite good. So we believe that the stock has potential to head higher and even touch new highs. For the extreme short term, the stop loss would be 1860 and target should be 1960. And one pick from the mid cap space is ITI. So even this stock has performed really well when the markets was moving lower. So over the last 2 months, the stock has moved contrary to the trend, and on all the upside days, the days when the stock was up, the volumes have also been very strong. So ITI is another stock one can buy with a stop loss of 360 and a target of 420.
Understood that. Thank you so much for joining us and giving us your topics as well as your index views. Well, let's now slip into a short break. On the other side, we'll be joined by Amitava Chatterjee, who's the new MD and CEO of J&K Bank, appointed just yesterday, joining us exclusively to discuss the company's business outlook at large. Stay tuned. Well, welcome back to Midcap Radar. As promised, we are now going to an exclusive management. J&K Bank has appointed a new managing director and CEO, Amitava Chatterjee. He joins us exclusively on the show now to discuss his role and the bank's outlook in more detail. Good afternoon, sir. Thank you so much for joining us. We understand, just prior to this particular appointment, you were the Deputy MD of SBI, and you also served as the MD and CEO of SBI Caps. So you worked with much larger organizations in the past. You are now at the helm of J&K Bank. First up, give us, what is it that you've assessed so far? We understand that today is just day 2 on the job. And what are your targets as far as J&K Bank is concerned?
Very good afternoon, Vivek. Good afternoon, Hormuz, and season's greetings from J&K Bank to all CNBC team as well as the viewers. Well, it's as you said, it's the first day after taking over at J&K Bank. And as you rightly said that I was with SBI till 2 days back. So, of course, what I intend to do would be to add some value to this bank. Of course, you must be aware that this bank is primarily a bank for the services of J&K and Ladakh, while it is present in 20 other states in the country. But primarily, it's for the services for this geography. So, going forward, it will continue to serve this geography along with all the development that is likely to take place in this geography. And the J&K Bank will be very happy to be a partner to all that development. As far as the numbers are concerned, of course, we will be sticking to the guidance that has been given at the beginning of the year. And going forward, we would also like to carry forward similar numbers with improved focus on reduction of NPAs and other such things.
Mr. Chatterjee, good afternoon. Thank you for joining in. Congratulations on the new stint. We are stepping into a new year. You have stepped into a new stint as well. You know, what's the situation on the ground currently? I know for a fact that you're still very early into the job, so I might not go into extreme micro for the bank specific question, but on an industry level as a whole, there was this brief period where there were concerns about bank deposits and so on and so forth. What is the trend that you are observing right now as you have completed almost 9 months of the financial year as well? And what do you see going forward as well?
Deposits continue to be challenging as it is in the entire banking sector. It is not any different here. We are also trying to face this challenge as and when we would find a solution to this, and especially the concern would be on the CASA. My focus would be on to regain some of the lost CASA in J&K, and there's very good reason why we should be able to do it in J&K, because as you know, this bank enjoys almost a 60 odd% market share in this geography. So maybe a little bit of improved services, a more adoption of technology, and other things. I mean, augmenting the entire process. I think we should be able to improve the deposit scenario. But I agree that it continues to pose a challenge as it does to the entire banking industry.
Mr. Chatterjee, thank you so much for encapsulating those points for us. Now, first up, as you take over, could you give us the top 3 points that you would be, starting with as far as J&K Bank is concerned? Just to reiterate for our viewers, the earlier guidance given by the bank for FY25, credit growth of close to 15%, deposit growth of close to 12%, ROAs in the range of 1.25 to 1.3, and NIMs in the range of 3.75 to 3.85. You said that at this point of time, you are looking to hold on to the guidance, but will deposits be a challenge? And your top 3 things to look out for?
Yes, I agree that deposits are going to be a challenge, especially with the growth that we have seen in the first 9 months. It is definitely going to be a challenge, but we would definitely like to hold on to the guidance given, because what I said, some rejuvenation is required, especially looking into the market position of this bank in this geography. I believe that we should be able to regain. We still have more than 90 days with us for this financial year. If you ask me the top priorities, of course, the top priorities will remain to keep the NPAs and the SMAs in check. That goes without saying. To try and increase the other income for the bank. This bank doesn't have a very good-looking cost-to-income ratio. So we would definitely want to improve upon that. We would like to maintain the NIMs so that ultimately the ROA and ROE are protected. But again, positioning of the bank is very good. It has done well in the last 2 years. If you look at the numbers, 22, 23 and 23, 24, the bank has done pretty well. It has been able to improve upon many aspects. It has done well in the net profits. It has done well reducing the NPAs. I don't see any reason why it should not be able to do in future. And also the environment is conducive. There are a lot of developmental work going on in this geography. So J&K Bank being a major participant in the financial
Right. Mr. Chatterjee, sorry to cut you in. You highlighted multiple challenges that the bank is facing, right? You want to boost the other income of the bank. You highlighted some challenges on the cost to income side of things and also on the deposit front as well. What are the steps that you intend to take to address these challenges? If you could encapsulate that for us, sir.
See, of course, cost to income ratio definitely will improve. See, both the numerator and the denominator has to be worked upon. I would definitely want to improve the interest income. The growth in advances have not been that good during the first 9 months, but there is a lot of pipeline that is there. So the bank had undertaken multiple technology initiatives during the last 1.5 years. So that has yet to we are yet to reap the benefits of those initiatives. So the initial glitches are gone now. We are on the threshold of reaping the benefits. We have also partnered with other insurance and mutual funds to sell third-party products. So that will augment the other income for the bank. So overall, I think the efficiency levels also need to be looked into to improve upon. So essentially, these are the three things I am looking at the moment. There would be many more things going forward, which I believe that with my experience in SBI, I'll be able to add value to.
We are sure that you will be able to do that. So thank you so much for joining us. We wish you and the team a very happy 2025 and wish you all the best as you step into this new role. And we'll hope to see you more often on the channel as you go ahead and deliver on the promises you've given us. Well, let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. We ended this year with a very bumper listing of Unimec Aerospace, and the fact that the primary market activity is not dulling anytime soon because market regulator SEBI has approved the IPO of Ather Energy and 4 other companies. Rachna is here with more details on what the primary market is lined up for in 2025. Rachna.
Well, SEBI has approved the much-anticipated IPO of Ather Energy. The company filed its DRHP in September 2024 with a total IPO size estimated at 4,000 crore rupees. This includes a fresh issue of 3,100 crore and an offer for sale of about 2.2 crore shares at an estimated value of about 660 crore rupees. There's also a pre-IPO plan of 620 rupees, which will then be deducted from the fresh issue. Post the IPO is where it gets interesting. Ather plans to allocate the funds towards expanding its operations, about 927 crore, which will be used to set up a new manufacturing facility in Maharashtra. About 387 crore will go towards debt repayment, and about 750 crores will be invested in R&D. About 300 will be directed towards marketing initiatives and more. The selling shareholders in the IPO include Ather's promoters, GIC, NIF, the second one, and the Internet Fund. But Hero MotoCorp, which has been Ather's largest shareholder at about 37.2%, will not be participating in the offer for sale. With this IPO, Ather will be the first pure-play EV two-wheeler maker in the listed space. It goes head-on with Ola Electric, Bajaj and TVS, which are the legacy players. But if we look at it closely with Ola, both the companies are still in growth phase and focused on ramping up their sales and manufacturing capacities, with Ola holding a market share of about 18%, while Ather is at about 14%. As of FY24, Ather Energy reported a revenue of 1,753 crore rupees, which is a significant figure, but still far behind Ola Electric's 5,000 crore mark, which has Ola, of course, has a larger production facility. It has sold about 3.29 lakh units compared to Ather's 1 lakh units in FY24. However, despite these large numbers, both the companies continue to grapple with significant losses. Ather's net loss for FY24 was at 1,060 crore rupees, while Ola's loss was slightly higher at 1,500 crore rupees. In terms of profitability as well, Ather has a gross margin of about 9% compared to Ola's 12.58%. This reflects the capital-intensive business models with high costs associated with production, scaling operations, and much more.
But apart from Ather, SEBI has approved 4 other IPOs as well. First is Cholos Bangalore, a pure play luxury hospitality chain which will be looking to list at about 1,000 crore rupees. Oswal Pumps also plans an IPO and to raise about 500 crore rupees. Apart from that, there's Quality Power Electrical Equipments that is also gearing up for an IPO at an issue size of about 300 crore rupees. And finally is Leela Hotels, a well-known hospitality brand that is set to raise about 1,500 crore through its IPO.
All right.
Thank you so much, Rashna. So 2025, we are expecting the IPO pipeline or the primary market activity pipeline to be as robust as it was in 2024 itself. Well, a couple of stocks on the radar before we wrap up on this edition of Midcap Radar. Have a look at both Tata Chemical as well as GHCL. Remember, both of these companies are soda ash makers, and there has been a development yesterday where there has been a minimum import price which has been imposed on the import of soda ash. This particular development bodes quite well as far as both GSTL as well as Tata Chem is concerned. Back of that, both of these stocks are doing quite well in this particular trading session. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.